What's up, fam? It's your girl Alexandria B, and we are back with another weekly swing trade watch list of the week. I missed you all so much the last couple of weeks, but y'all saw what the market was doing. It was not my season to find any type of reason, but I see a lot of potential ahead of us. So let's go ahead and kick this off with the economic data and earnings. Then we'll head over and check out the indices, sector ETFs, and our watch list. Let's get it. The screenshot that we're looking at comes from the website Forex Factory, which is one of the main 3 resources you must use in order to know the important economic data that's coming out for this week. I suggest using Forex Factory, Market Watch, or Econo Day, which I will link in the description below. When you're on Forex Factory, you're going to want to make sure that you click on the filter and have all of the red envelopes, which you see here. This is what you want to pull up because this is the warning. Make sure you know what time this data comes out. All right. So this week pre-market, not only do we have PPI, we have CPI, we also have retail sales. This is a big week and I'm so excited because the more data we have, the more volatile the market tends to be, which means that we're actually going to get some price movement going on instead of being stuck in a range, which is the hope. Now, when we head over and we're looking at our earnings, I actually see a lot of amazing things coming up this week. My number one thing is going to be Thursday after hours, and that is when Applied Materials reports earnings. Now, Applied Material is at the top of the supply chain for semiconductors. All right, we could basically just say this. The materials that AMAT makes, they then sell it to NVIDIA, and then NVIDIA gets to go be them. All right, I enjoy investing with the top of the top of the top of the supply chain. That's where the money is. Thursday before hours, we do have Walmart, Alibaba, JD.com, John Deere, some really, really good tickers that maybe aren't name brand, have us in a chokehold, but they move. We also have Tuesday pre-market, before the market opens, Home Depot and Hut. I love Hut. So now we're going to go ahead and head over to our indices, check those out, and see what we got coming up in the market this week. We'll kick off the indices looking at NQ. Now, this is not my normal layout that I'm trading. This actually is, but I didn't want to pull this up and give you a panic attack right away. So we're going to start off with this cleaner layout. In my opinion, one of the easiest things that you can do to prepare your chart is to use the moving average ribbon. This indicator will allow you to pull up 4 different averages, and as you can see here, I color coded the levels that they are at, and you have the average price range, right? We have the average price for the last 20 days, for the last 50 days, for the last 100 days, and the last 200 days in the market. It's really nice. Now, of course, I added this level here because we had these touches of support in January 2024, and that's what we came back and touched in August. Keep that in mind. However, we consolidated and held the 200 moving average all last week. What a trippy week. We went bullish, or we went bearish, bullish, bearish, bullish, consolidated just for the weekly candle to look like this huge, beautiful bounce. And right where it bounced right here was actually the weekly 50 MA. That bounce was beautiful. Make sure that you check the video that I put up of me live trading that move. It was beautiful. All right, we come back here. The one thing that I want to point out is that the averages are not in order. So this is not trading on average. What do I mean by that? The yellow is my 20 day and the blue is my 50 day. Why is the blue above? Why is 50 above 20? I want to see 20, 50, 100, 200. You're trading on average. Right now you're a little mixed up. I'm going to need you to pull back up to this 20 MA at the very least. We might even want to see, what I'm going to pull up now is actually my 9 moving average. And I used a simple moving average. And we'll go ahead and turn that one green. All I'm doing is I opened up the indicator box, click the settings, style, turn it green. Little tutorial for you there. Now we can see on Tuesday or on Friday that we did close just a little bit, just a hair above the daily 9MA. So I am expecting to see us push into the 100, which is going to be at about 18,890. A break above there, I do expect us to see 19,227. We get there, the 19,562. Now at the 562, that's when it gets real for me. Will we reject here or will it break above? Now, if we do break above the 562, I need to see it break above, pull back, and hold it as support before I am truly bullish. Before I'm truly bullish, you're going to have to break back above here, pull back with low volume, hold that as support, and then work your booty on back up. I'm bullish. Then I will be ready to enter into my long swing trades and hold those for 1 to 3 months. Feel me? All right. Now, we want to make sure that we look at this from a bearish perspective. Child, at a reject at any of these points, I'm bearish. However, if we don't even make it to the 18,891, I do want to point out this gap that we have here. Now, this gap was filled, and perhaps we could even see a pullback towards it. So this low of the previous Friday, the open of last Monday, so at about 18,374. Wouldn't be mad if we kind of push back in there, held that again. We definitely break below the 374. I'm expecting a move back down to the daily 200 MA. And listen, you guys, if we lose at 853, I'm expecting to see 354 next. From there, Godspeed. All right. Now, let me show y'all this on the layout that I'm currently trading, and we'll look at the same setup. So when we're here on the hourly, something I want to say though is this could be a little bear flag. This could be a little bear flag. I do not think so, but we do have a drop. You know, we got the higher highs, the higher lows, right? So again, if we fail to break this 695 to 18,700, even there, I'm looking to trade this on back down to that 18,100 range. So this level here is just a key one that I was able to trade off of. I was able to catch this bounce off of it, even in this tight range. Absolutely beautiful moves over that all last week. So that's why I have that marked up. Now let's go and look at ES on the cleaner layout. And again, you can see what I did was I marked off the moving averages. So we have the 20 and the 50 sitting there kissing each other, which is my yellow and blue, the 100 and the 200. Now, ES did not make it down to the daily 200 moving average. When it did not make it to the weekly 50 moving average. We got that hard bounce in there, and so that's curious, but thank God tech finally had some relief in there, okay? Thank the good Lord above. Now, I do want to go ahead and mark this trend off when I'm looking at ES. Right in here, so price pushing up, because I'm on the daily here, so like price pushing up, meeting that trend line, it would be right in here where the 20 and 50 is, where we have this level, which was where we gapped up the open of this gap here, which turned into support resistance, all that prettiness. And then where we broke below the 50-day right there. So I am looking for ES to push into the 5490 to 5500 range. If we reject there, I'm bearish, back down into the 5350, below there, back towards the 5200. Above there, we break above there with this trend line with some confirmation. I'm looking at the 5600 next and 5722 into all-time highs. Now that we know what important news is coming out this week, i.e. the economic data and earnings, we have a general overview of the market by looking at NQ and ES, the two major indices. Now, what we're going to do is condense our viewpoint a little bit, and we're going to check out the sector ETFs and see which sector we should pay the most attention to. When I'm looking at the sector ETFs, I start on the weekly or sometimes even the monthly time frame because I want an omniscient point of view. Then throughout the week, I can go down to the lower time frame and play what I see out up top down there. That's how I'm able to hold my swing trades for so long. I find confidence in the omniscient point of view. Now, when I come to the weekly time frame, I look for a setup that doesn't hurt my eyes. So to show you an example of an ETF where I said, no thanks, we're going to look at XLP real quick, and then we'll get into my top 4 sectors that I'm watching this week. We look at XLP. I said, what is this? I'm not even going to try to decipher it. Never mind. All right. So let's go ahead and start off with the communication services sector. When I looked at this, I had to play with it a little bit to get my trend lines where I really wanted them. I'm not the strongest with trend lines, but these lines aren't glue, so I can move it around until it makes sense. All right. So I start off on the higher time frame, and then I just keep dropping down a time frame to make sure that the trends looks great. So when I'm here, what I saw was a potential bull flag. We love it. All right. We had the 3 weeks where it dropped. We got this inverted hammer here and a huge gap down on XLC last week, but it powered its butt on through right here at this resistance trend line. All right. So if we come, the average that I have pulled up right now, as well as the 9 moving average. So if we come down to the 9 moving average, I want to explain to y'all what I have marked off here. So what I marked here was a gap that we had, which you could see a little bit better if I come down to an even lower time frame here on the hourly. So this was back in May 31st, right? We had this gap here, but price has absolutely been respecting it since, right? I mean, we've gotten some high powered moves off of this. We got this hammer and it just started the trend on up to 86. When we came back down, this is where it lost it. But look how when it pulled back above the 9 moving average, look where it found support on the 9 at that gap. We got a tweezer top here when it broke back down, but made a higher low, right? And then we started, and from there, we've been making higher highs and higher lows off this support trend line. So this is what this one is here. This is a gap that I was able to clearly see on the 1 hour. What we have here is a gap that we can very clearly see here on the daily time frame. Now, this gap came from June 2024. Again, we can see how price just beautifully respected it, closing here, bouncing, rejecting just right in there. And then here at the top, we have a beautiful fair value gap. Look at this. All right, look at that. Yeah, I should move that up a little bit more to right there, but we're good. I see what I'm saying. All right. Now, right here where I marked off this 85.21, I used the Fibonacci levels, which let me pull that up for you guys. Why did I just click them both? There we go. So mine's a little bit off from it. Let's go ahead and move that there using the Fibonacci extension. So at about 85 even, right? Which we did break above that, which is the 0.5 there. So we have the 618 right here at the 84.34, the 0.5. So what we have above us is the 0.382, which we love those 3 levels here on the fib, so that's going to be at the 85.71. I'm absolutely looking for XLC to break above 85.71 and rock his butt on out from there. Now, if I pull up the moving average ribbon, this is also a hot conglomerate mess. All right, we got the 20 down here, the 50 up there. We powered through the 100. So I wouldn't be surprised if we did pull back a little bit, and I would like to see it pull back to about 84.43, hold here, and then catch that 20-day moving average and work its booty on back up. All right, get that 20 above the 50, and then we'll have 200, 100, 50, 20. We'll be trading on average. Now, if XLC breaks this, we get a bull flag break. Wait till y'all see my watch list over there. The next sector ETF that I'm looking at is going to be XLF. This is my second one that I'm looking at. On the daily, we have a low volume retrace. All right, we are on RSI. We are here at, we near overbought. We're near overbought. Not quite, but we are near there. Now, when we look at MACD, these aren't really moving. There's no momentum, right? We want to see MACD diverge, meaning we want to see these lines move away from each other, showing us that there is some momentum in the move. I promise I'm trying to move it for you all. There we go. So as you can see here, when we got this center line crossover right in here, and look how it diverged. I was moving up and you got this strong trend up. But right in here, as MACD started to converge, the lines are together, you can see that we started to consolidate inside of these trend lines. So I really want to see these diverge a little bit more. Now, we came above the 20 moving average with higher volume. I don't want to negate that. However, when I drop down to the daily, okay, we still have a bearish crossover here. I know that the bearish momentum is slowing down some, but you haven't switched. You haven't code switched over to the green yet, all right? So as price is pushing up, look, this doesn't match. Price is pushing up, volume is pushing down. I am looking to see, and right here where we have this gap that I marked off here, we also have the 20 moving average right there at 42.80. I am looking to see what XLF does at 42.80. Will we reject here and then push back down, which I'll be bearish and looking to follow this path below, or will we close this gap and I will look for a move above 43 to play into the 44 and then into the new highs from there. XLI. I want to love XLI so bad, but I need a daily close above 126.50 at this point, because baby, I have tried to trade you above this 126.50, 127 for too long this year. Too many times this year you have tricked me. You did it in March, you did it in May, you did it in July, you did it at the end of July going into August. Baby, I'm not trading this until you get over that 126.50. And even then, I'm scaling out, maybe even taking profit at the 128.11, okay? Honestly, above 125, 129, and I'll feel safe, comfortable, and like I have a good thing going with the industrial sector, okay? Other than that, now remember, Home Depot, JD, them people, okay, they report earnings this week. I'm interested, but I'm gonna need to see you above there or below the daily 50 MA, which is here at the 123.28. All right, I got my level at the, I have it at the 100, which is 123.56. Liddy, let's go ahead and move that down to the 50. All right, and again, you're not trading on average. 20, 100, 50, 200. I need you to trade on average for me a little bit there, all right? Now, I am going to go ahead and adjust my levels to where the moving averages currently are. So we do have this 124.86. So I like whole numbers. I'll say 125. Above 125, this would be a nice day trade instead of 126.21. And XLI does not have a wide spread like XLF typically does and XLV. So I don't normally trade these sector ETFs. I keep up with them, right? I use them as a weather report, as my good brother Cam says, for my watch list. XLI, I do trade because, like I said, the spread on the option contracts is not wide. It's easy to get filled. I like it. Now, so above the 125, I'm ready to go with the industrial sector to the upside, or below 123. I'm ready to go on the industrial sector. XLY. Let's go to the weekly. We have a sell at the reject of the 200 MA. This had to have been on the daily time frame. Yep. So at the 200 MA, we have at 176.52. It tried to hang on to that too. It really tried to hang on to that with that pin bar hammer right there. However, you broke back below it, consolidated there all week. Now, this is what it looked like on the daily, a hot mess, but you got that strong bullish candle on the weekly. All right. And what are we doing? This one's too easy. We right in between the 50 and the 200. All right. So for XLY, being that it's in this range, this is the discretionary sector, which has some earnings this week. Walmart. I'm looking to see you either above 175, and my eyes will be on the 179.50 where the 20 is, looking for a possible reject above there. Let's go. Or below that 167, I'm trading you on down to the 162. Let's get it. All right. The momentum, MACD, is in favor of the sellers. That's what I see there. So we'll see how this week plays out. Now what we're going to do is go ahead and check out our sector ETFs. I chose 2 to 3 stocks per sector that I was interested in. Come on, y'all. Let's look at it. As we go through my watch list, you're going to see a recurring theme for me is that I'm looking for price to push back up to the 9-day moving average and see what happens there. If we reject it, I'll play out my bearish levels. If we break and close above it, I'll play into my bullish levels. So for the communication services sector, one of the tickers that I chose was Google because beautiful. We return right back down to the previous support, holding this level with that high volume. The momentum is bearish across the market, okay? Across the market. Now, if I pull up the rest of my averages, a little bit of an eyesight here, we broke below the 9, we broke below the 20, didn't quite reach the 50-day moving average, which was at 150.9, 151. Typically, whenever price loses the 20-day moving average, if the 50 is below it, I'm looking to play it into the 50-day moving average. I have to play what the market presents me. We didn't quite make it down there. I would have liked to. I like the confluence of it, but we can see right here, it didn't quite make it down to the 50-day moving average either. And took its little booty back on off, right back to the trend line above it, and we continued the next leg up, right? So to turn those back off and just pay attention to the 9-day moving average right now, we do have that above this daily gap here that I had marked off. It was beautiful. Was demand for a little bit turned into our supply. So on the daily, we see that our 9-day moving average is at 164.60. Y'all can see the exact levels here. I'm going to round up and down to whole numbers. So we can see that the 9-day moving average is at 165. Above 165, I'm looking to play that into 171, possibly 174.55, 181, and into the back into previous highs from there. All right. Now, if we start the week off and we fail to break over the 164, 165, I am looking to play this back down into the 155 and see, okay, will we hold this as support again? Okay, because I do want to point out these last 2 bullish days that we had, okay, it was lower volume, but we can see that RSI is oversold and we're starting to get a bullish cross. The purple is the line, is the average, right? I do this every time. And if you forget what the colors are, click on the settings of the indicator. It will tell you right here with the colors. So the yellow is the moving average. I do that every time. And then RSI, the actual speed, is the purple. So we can see that the speed is starting to pick up as price is going down. Now I want to see price start to curl up, okay? So if we break above this 165, we should see the yellow line also start to curl up and come away from these oversold values towards and work its way on up towards the overbought values. All right, so that's what I'm looking for on Google. The next ticker that I saw in the communication services sector was Take Two Interactive Software, TTWO, T2, whatever it is that you call it. I'm fascinated, especially we have this beautiful trend line right here. I'm actually going to adjust this a little bit. I'm OCD with my trends. I want it right on those wicks. All right, now look here, because I'm on the weekly time frame now. We go the next place over. Look how this trend line is right there in congruence with the 150.25. So I'm absolutely looking to see if we break above that 150.25 and we have our weekly 9 moving averages at 152, 151.92, but 152. So that would be actually safer, is to see I want to see a 4-hour close above 152, and I'm looking to play that sucker, trade that sucker on into the 168 range. Would love it. On the daily, we did close above that 9 moving average. And so see how the RSI is the purple when the actual speed did pick up away from the oversold values. You definitely did your thing post earnings, okay? Love to see that. MACD is looking like it's wanting to lose its bearish momentum there from looking at the histogram. Yeah, I just really want to see this curving up together. And what do I mean by that? Like here. See how we got these curving up together. Okay, these are the type of things that you want to stop and pay attention to on RSI, so, or on all your indicators. So if you see that RSI looks like this right here and you're looking at what the price looks like and all of that, go back in time and look at when RSI was also down at oversold values as it was working its way out. What did it look like in hindsight, right? These things that you just want to pay attention to. So for T2 TTWO, I'm looking at the 151 to 152 to see if we break above there or reject again. Like I said, from the above the 152, my first target is going to be this 156, and then from there the 160, and then into the 168 if we hold that. All right, so for our financial sector, one of the tickers that I chose is JP Morgan. Still playing this baby on out, all right? Still playing this on out. We caught that lovely bounce off the 190. So this is the third time that we have been able to trade JP Morgan off the 190 range. So I definitely suggest that you go back to previous swing trade watch list, because JP Morgan has been up at the top. That was so country. JP Morgan's been at the top of my watch list for quite a few weeks, right? We consolidated here at these highs, and baby, I was not that interested. So while we're waiting, kind of holding our breath like, market, what are you gonna do? This is one of those ones where I'm gonna want total, all aspects of confluence in order to enter into this one. But I'm ready because it still has a push into 245 according to the analysts' ratings, right? And measured move. So here we also, that 202 was beautiful for me, but off that 190, that was my target. We hit that beautifully there. It did break up a little bit, but I had already exited. That's okay. So above, we have like this gap right here. So I'm gonna say, for me, it's above 208. I'm playing into the 212. We break 212. I'm playing right into the 215 to 220 range. Above that 220, we're definitely breaking into all-time highs to that 231 and 245, which again came from those analyst ratings if you go back to previous watch lists. Wells Fargo. I was actually talking to a family member today. They requested this ticker, and I see what she sees. Shout out to you, Queen. I love the work that you put in. Shout out to you. All right, so on Wells Fargo, y'all see this. We had this lovely weekly drop below the 9 moving average, just continued to break this previous resistance that we had here. That even goes back to March 2022, October 2021, right? And then held the next level of the previous resistance that was from December 2023. We're right here. So with this spinning top on the weekly, it honestly really makes it easy. So I'm going to say above the 53.50, I'm looking to play that into the 56.80. I would expect to see it reject that. I'm not going to hold you, okay? Now, if we go ahead and we break below the 50, then I am looking to play that down into the 47.50 into 48.50 range. I do believe that we'll be looking at a reject instead. When I come down to the daily time frame, we can see where it attempted, we had these two gap downs here. It attempted to push back up, but it's already starting to reject this 53.40 level and come back down. Now, we might even, where this daily moving at, or 9 moving averages at 54.64, so about 54.64 to 55, we might even see price push into there, start off bullish at the top of the wick, and then reject, give us this beautiful upper wick, come back below the 53.40, and I'll be looking to play that down into 50.45, scale out or even take profit there and then continue to play it down into the 47-48 range. I like that setup. I also have Morgan Stanley because I really just wanted to remind you all. I told y'all, God, this one's beautiful. We have another low volume pullback. While, yes, the speed, the purple one, is starting to speed up, we still have price coming on down. Y'all haven't even kissed in there. So again, I would expect to see a bearish candle. I'll play what the market gives us, so to start the week off bullish, and I would like to see what happens at the daily 9, so at 96, 79, 97 to see a reject there. I will not be bullish on Morgan Stanley until I see a daily close above 101. I just wouldn't even play into this range because, again, you've been annoying me, making me think you're going to go above it too many times. So now, let me see a daily close above 101. And I'll be more than happy to play this into the 109, 118, so on and so on. All right, for the industrial sector, y'all know I had to put FedEx on this chart. Now, I'm on the weekly after earnings, and we had this push up, and I was just saying, y'all, we're at 2 trend lines. We have this one resistance trend line, this blue one, that it met there from these highs starting July 23. And then we also have the support trend line from September 2022, where when we extended that all out to the lows, price also met there. There was just no way that price was going to break to the top yet. Not yet. Okay. We know that they're a good company. People took their profit. Let's let this drop. All right. And so what we were waiting on was for price to come to the 9 moving average, and we hoped it would have held there. However, the market is giving us an opportunity to come in and buy these shares before the election season starts, okay? All right, so we held this right here. This is too easy for me. FedEx below 272, below 273. I'm looking to play that down into the 264, 261 and 264 range. I'll word it like that. You lose 264 down into the 250, and I would expect for price to hold there and then to work its way back up to the resistance trend line and then break into the new highs from there. FedEx looks good to me. UPS, I just want to point out to y'all that this volume has been decreasing as it's working its way back up. So don't lose faith. You should have scaled out to minimal positions or gotten all the way out anyway. Don't lose faith in UPS. Set your alerts at 135 and be ready, okay? We're looking for this to get to 135 and break back above. If you did go ahead and exit, that's fine. We exited in profit on the perfect chef kiss day, right? That's fine. Have your alert set at 135. If we break above 135, I only want to trade UPS to the upside based off of what it historically does during election years. Right? That's what we're ready for there. Also in the industrial sector, these airlines that keep having me stranded. I wish I could just trade you down, but when I pull it up on the weekly, you're very clearly oversold and starting to speed up and work your way up. Fine. Fine. So American Airlines, I want to know what you're going to do at 1069. All right, set them alerts at the 1069. I actually want to move this back there because that was a beautiful morning star that gave us just this $5 move up, and on American Airlines that was the money. And then a $10 move down because what the heck. So I want to see what American Airlines does here at the 1069. So, but for me, I will have my alert set at about 1050. I'm going to go ahead and have it set in there just so that I'm looking ahead of time. And I would love to see this break back above. Honestly, a daily close above 11. I'm looking to get on in this and swing it up to the 1550 again. I'm looking to get in it affordably, sit in it, and make my money. Because you can't make money trading affordable tickers, all right? Amazon for the consumer discretionary. All right, babes, you dropped right where I wanted you to drop. Again, common theme. I'm looking for price to return to the 9-day moving averages because we did seem to find touches of support. However, let me turn that on off, right? We not trading on average, all right? We got 20, 50, 200, 100. I would have thought. No, I would have thought. We would have came on down to this 200, to the 145, 146. I would have thought. On the daily, we coming back here to this 200 moving average. If we continue to reject this 169, 170 range, okay, and we get a close back inside of this gap right here, because y'all see that this is a low volume pullback. As much as we don't want to see it, y'all see that that is a low volume pullback, okay? This the daily 200 moving average. If we can't make it over there, I'm not saying immediately start buying Amazon. I'm just saying start braiding Pookie hair, okay? Doing whatever it is you gotta do to get ready to buy Amazon, because it's gonna go back down and go on sale for us. Amen, by the grace of God. Now above 170, I am looking to play that into the 20, which is at the 178, which 9, so we'll say above 171 where the daily 9 is. Looking to play that into the 178, which would be beautiful. Above the 178 into the 184.55. All right, below there, all right, I'm gonna follow the average. I'm just gonna follow the average. That's my plan, Jack. That didn't rhyme. Nike. So I don't have much to say about Nike. So I know y'all probably like, girl, why you put it on the watch list in? Because I want Nike to break out of this range, meet that 9 moving average and reject, and let me trade it on back down towards 65. Because I do absolutely think that this will reach 65. I can see it. Not because I'm a Nike hater, but because Nike has some work to do. All right. Now we break out of this range because it is trying to hold this 20 moving average. We break out of there, I can see to the 82.10, because that's about that 50% mark of this gap down, this earnings gap down that it had there. Pan W. This is actually one of my top watches coming into the week. And I know we didn't really look at the technology sector. I needed to settle out before I seriously think about getting in, because technology, man, that sector can make you some money, but it can also make you have to go to the side. You know what I'm, no thanks. Ain't gonna finish that sentence. But look, so we have this support trend line from May 2023, August, April 2024, July 2024. We broke it in August, the first week of August, came back above it. For me, I do not mind being patient. Break on above 342. I'm in that thing. First target 361. Next target 378. From there, all-time high. Now, I actually haven't marked off what the analyst ratings are. With a minimum of 275. So 343, we'll say 341 and 391. 341, which is where we're coming to next, and then 391 for highs. So we'll put that there. So I would love this. This is a $50 move above 341, which is set to be the average price, or 343. Come on, girl. Oh, that's what I had there. Yeah, the average price 343 into the 391. Yeah, I like that. Break above 342, my babes. Our first target 362, and if you even wanted to wait until above 362 to play into that 391. And that is my swing trade watch list that I have for you all. Thank y'all for the support so much. I'll see y'all at the top. Bye.